Strategy founder, Michael Lee. Mike, great to see you. Thanks for being here. Your reaction on these markets in the face of this huge move for the NASDAQ year to date?
Yeah, Maria, I think this is a very big short squeeze. Maybe the selling got a little bit overdone towards the end of last year, but what we've seen is massive multiple expansion. Historically, when the economy is slowing, liquidity is tightening, and earnings are declining, multiples contract. They do not expand. And what we've seen is, since the third quarter of last year, is the earnings multiple on the S&P 500 has gone from an 18-19 to a 23-24. If you believe the estimates are accurate, I think the earnings estimates going out a year are too high. So in all likelihood, multiple expansion has happened to the tune of almost 30%. This is kind of the opposite of what you would expect in an environment where M2 is contracting year over year. So when the problem with being bearish, though, is that it's very much the consensus. And the short interest in the S&P 500 a few weeks ago was the largest since the middle of 2007. And it's very easy to bet against that and to push markets higher. And yes, some of these big tech names were probably oversold going into the end of last year. But Facebook has gone from 90 to 270 from the end of November, early December to now. That's a 300% move in a massive company that's worth hundreds of billions of dollars. So yeah. I think this move is ahead of itself. I think it's devoid of where the economy in reality is. But so the saying goes, markets can remain irrational far longer than you can remain solvent.
Yeah, that's true. Kevin O'Leary's with us this morning. Kevin, what do you think? Would you buy stocks here? Jump in.
I am, and I'm like many other managers, perplexed by the concentration around 7 names that have driven up all these values, the 7 AI behemoths in tech. But in the last 3 trading sessions, we've seen a broadening out, particularly in the mid caps, where there's a lot of money pouring into. You've got to remember that most managers have been caught offside from the last 2 quarters. They're underperforming the index. Nobody saw this coming. There's a ton of cash sitting on books. Some managers are 20-25% cash waiting for the pullback. Meanwhile, it just doesn't happen. And so we're in a very interesting place. You have to believe, if you're a bull right now, that Powell is actually engineering a soft landing. That's what this market's telling you, which is unprecedented. You know, it's so rare that this would happen given all the concerns people have both globally and domestically, but that's exactly what's occurring. And so, you know, the trend now is to catch up with the index, and that means more money coming into this market. Watch it happen. It's going to continue.
Wow. Mike, look, we've had 10 rate hikes already from the Fed. We've got the next meeting next week. The next Federal Reserve policy meeting is Tuesday and Wednesday, where the Federal Reserve is expected to take a pause after 10 rate hikes in the month of June. But we'll also get the CPI for the month of May and the PPI right before that meeting. Mike, what's your expectations on inflation and what the Fed does in June? And does it follow up in July with a hike?
So right now, the odds for the Fed are looking like, you know, we're at 75-25 for no hike in next week, and almost the opposite for a hike in July, which to me makes absolutely no sense given the lag time it takes for these Fed rate hikes to actually hit the economy and slow down inflation. And if we're still considering raising in July, it makes you think the Fed should have kept going with the 50 or 75 basis point hikes earlier this year to fight inflation. I think next week we're going to see both CPI and PPI are far above the 2% Fed targets, definitely headed in the right direction. But if inflation is going to find a target in 3.5–4% range, that's not tenable, because inflation is not only bad for markets and the economy, it tears society apart. It makes people poor. It's the invisible tax. It's something that has to be addressed, which is why the Fed has a 2% inflation target. Look, it's good that the stock market is soldiering on and it's not falling apart, and the bears have been wrong. But the other side of it is that at some point, either the economy needs to dramatically improve or the market needs to dramatically correct.
Yeah, especially since we do not believe we've seen the full impact of these 10 rate hikes, right? We'll probably see an economy that will continue to slow.
Yeah, look, I can't see this economy accelerating considering what's going on in the banking sector. We are in the midst of a full-blown banking crisis. Not like 2008 where banks own all sorts of toxic assets, but you're seeing a deposit flight. Nevertheless, we're going to have additional bank failures, and credit is contracting all across the country in various different formats. So I can't see the economy accelerating from here.
All right, we'll leave it there. Michael, good to see you as always. Thanks so much. Mike Lee joining us. I want to show you the morning mover this morning. Carvana up in the pre-market. It logged